Hello and good evening to all our viewers. Thank you for joining in for this special session on this Decoding Budget 2019. I think we'll just start off for a minute. We'll just wait for all the audience to just join in for the session and then we'll just begin in next 1 minute. So please stay tuned. Okay, so now we'll start off with this session. So very good evening to everyone. Hi, this is Vaibhav Shah here from Orowealth, and today we are just going to decode the budget 2019 presented today. So of course, I think this was the first budget after the Modi government got second term, and every eyes were with great expectations about what would be there for this budget and how the government will take over this, twin issue of growth and fiscal prudence at the same point of time. So everyone's eyes, be it the investor community, the retail investors, or even the common man, they all were looking out for this budget with great expectations. And I think the budget has not let anyone down. So if you can rightly see after the post-budget conference, as rightly said by our finance minister, that the budget was actually, it was not just a budget, it was actually a vision document. It had a vision for 10 years and of course the plan for the next 5 years. So that's where the whole thing lies. That this is the government who is not, only taking into account the short-term issues or the short-term things that are coming on in the country, but it's main about setting up a tone and setting up a vision and setting up a roadmap in order to achieve that particular vision. So yes, this was not a budget speech. It was actually a vision document. As was rightly, witnessed during the first 10 minutes only of the budget. The finance minister started off with saying that India wants to become a $5 trillion economy over the next few years. Now that was a very bold statement, and the statement was also there as a part of BJP's manifesto for the general elections. That it is very important in order to strive growth. India needs to leapfrog right from the 11th position to 6th position when it comes to GDP growth. And of course, we want to be one of the fastest growing nations across the globe. And this is the government who is really striving hard in order to achieve that vision. So if you just see at the start of the document, where Mrs. Finance Minister says that this is the budget for Gaon, Garib, and Kisan. So along with the development agenda which the government has in their mind, it's also the social objectives that they are keeping at the equal focus. So this was the budget not only focusing right on development, but also at the same point of time, it was looking at how to bring about social equality. So the pattern for this session would be simple. I would give you a brief about the budget, some specific announcements that actually can affect common man and the investors, and then we can take up questions which are being posted by our viewers. So in case if you have any questions during this session, you can please post it all about. So as before the start of this budget, if we can see that Modi government got the second term on a historic majority because the people of India used to believe in the objectives of this government. And when this government actually came into power for the second time, one of the major problem that India was facing was growth. With all the macro indicators actually within control, be it inflation, be it current account deficit, GDP growth was of a prime concern. But at the same point of time, prudence was the other thing which the government had to balance. So, it where the government was actually walking on a very tight rope of balancing this twin objective of maintaining the glide path, which was always announced in the budget, and at the same point of time to provide some stimulus to the growth. However, I think it was a good surprise for all the investors and all the viewers who are watching the budget that instead of overshooting the fiscal deficit target, which I think was there in the media, and many people thought that in order to achieve growth, maybe the target of 3.4% may be a little overstated and may the government come down to 3.5 or 3.6. But actually, if you see that the government has resorted to a lower fiscal deficit target of 3.3%. Now, of course, we'll get into the maths about what lies in these numbers and everything during the later part of this session. But yes, coming back to the objective. So, as rightly said, it was a vision a vision for 10 years. So when it comes to social objectives, when I say Gaon, Garib and Kisan, the budget has kind of touch base each and every aspect of this particular community. So when it comes to roads, the government has laid down a simple path of developing 135 kilometers of road per day. We come to metros, around 657 kilometers of metro lines are already operational. The government has showed an intention to invest up to 100 lakh crores over the next 5 years in order to develop infrastructure. The first phase of Bharatmala is already done, and now the government is into the phase of second. So this all gives you kind of an, I would say, an impetus that development is on the right track, and the government is pushing each and every inch in order to achieve that target of developing the country. Because now if India needs to grow, it has to be led by investments also. It can be a consumption driven economy, it needs to be an investment driven economy also. So, however, when it comes to investments, of course, that is the one which is already growing on. But at the same point of time, if you see the social objectives, so be it the 7 crore LPG cylinders, be it an electricity for everyone by 2022, be it housing for everyone by 2022, be it pension for everyone, all the social objectives are also taken into account while presenting the budget. And this all gives a very, I would say, a balanced approach of keeping development. Now, this was the basic things that we can recollect, from the budget speech. Now, I would like to, look into some specific announcements which were there in the budget. And of course, once we get into the reading of the fine print, which is available on the government's website, more and more, I would say, announcements, during this whole pros and cons in the particular announcement. So, of course, during the last half an hour when the budget was about to close, you would have seen a good amount of sell-off in the equity markets today. Equity markets were having a good amount of run over the last 4 days, but today it has shedded off the gains mainly on account of this one big announcement, which I think people took it in a very negative way. So the government has proposed to actually increase the minimum public shareholding in listed companies from existing 25% to 65%. Now, of course, that's a kind of a nervousness for most of the equity investors, which clearly means that there would be a 10% sell-off by many promoters. This is a very bold move in order to bring about or increase the liquidity by means of a free float, as many more public shareholders would be holding shares of these companies. Technically can be seen as a very good move in order to meet that requirement. However, as everyone knows that equity shares and the shareholding is actually guided by the SEBI. So it is just a proposal. However, the timeline in order to achieve this regulatory requirement will be actually notified by SEBI. And so this was just a knee-jerk reaction of investors in the equity market, thinking that there would be a good amount of sell-off that can be witnessed in the equity space. Now, just to put down some numbers, if you just look at the top 500 companies by market cap, there are more than 2 lakh. In terms of market cap, if you see, if the tune of 2 lakh crore that would be there in the market at the current market price. So yes, it has created some nervousness for the investors that maybe it may not be the good thing to be announced in this budget. But if you see at the overall picture, this will just bring in more liquidity, more amount of public participation into equities, more amount of foreign participation into equities, and this will also open up few companies where actually it was a very tightly held company by promoters. So actually, if you see, it's a very good move, brings good transparency, brings good amount of liquidity into the system. The second welcome move by the government was a stress on easier KYC norms. Now, of course, the domestic participation has been quite high in the Indian markets. Our NRI investments over the last few years have been very low. This was mainly on account of tough KYC rules. So because of which many foreign investors are not very much comfortable of investing into equity markets. But government has said that now they want to bring about some reforms in the KYC norms so that investments by NRIs and FIIs becomes a little bit easy in Indian markets. Because of which they have already tried to club the limits of NRI PIS scheme and foreign portfolio investor scheme into a single bracket. So maybe that will open up a good amount of investments from all this investor community. The second was, of course, that there was a thrust on developing our bond markets. Now, that has been a talk of the town from quite some years now, that India has a very robust equity markets, but there has been very low participation in the debt market. This is mainly on account of that most of the trades and the market is actually over the counter, and there is not like a proper exchange on which you can exchange debt securities. But however, now looking at the current condition where we want to tap foreign money also, the finance minister has given some thrust on developing the bond market and also to attract FII capital for investing into debt market. So we are very hopeful that going forward, there will be some very positive development on the Indian debt market side also. One of the, again, a very positive movement by the government was infusing capital into public sector banks. So as per the regulatory requirement, it was estimated that the government will infuse close to 50,000 crores into PSU banks in this year. However, to everyone's surprise, the government just tuned up that number to 70,000 crores for PSU banks for FY20. Now, what does that mean for PSU banks? If you had just seen that post this announcement, the PSU banks index just had a rally, because yes, this was a very welcome move by the PSU banks, which are already suffering on the account of NPS mounting into the system. So they needed some regulatory capital in order to take up that losses. At the same point of time, lending was on a shorter side. Many people are not, or many public sector banks were actually not willing to lend on account of paucity of capital and paucity of good opportunities. Now with this growth capital actually coming into the system, even after accounting for some provisions with respect to NPS, there would be at least 30 to 40% of this capital which would be available for lending. Now, yes, lending has been on the shorter side. The credit growth is slowly picking up. But of course, one more announcement which the government did, which actually solves the problem of lending for the PSUs and at the same point of time, the liquidity shortage on the NBFC side. So the government has agreed to give for a 6-month one-time credit guarantee of taking the first 10% hit of the loss on account of any assets which has purchased from good and sound NBFCs. Now, these assets are mainly a mode by NBFCs in order to sell off their loans, good quality retail loans, to the banks in order to raise money. So, in spite of just transferring this money to NBFCs without any accountability, now there has been a kind of a guarantee which is given on taking the first loss. So, which will help the PSU banks and the other banks also to take off these loans from NBFC. At the same point of time, will help to kind of repair the liability side of NBFCs. So, in all, if you see, it's a very good move for the financial sector as a whole. Other good move from the regulatory point of view was that now housing finance companies come under the ambit of RBI. Earlier, they were actually regulated by National Housing Board, but now they would be, the proposal is there that they would be now under the ambit of RBI. So what does that mean? So if you had seen over the last couple of years in the regime of Mr. Raghuram Rajan, the bank had a kind of an asset quality review undergone, by which whatever major threats were there or whatever loans which are not being identified as NPAs were actually, kind of, I would say, pressed by RBI to be recognized, so that at least the clear picture of the bank's financial condition was available. Now with this move, with NBFCs and HFCs being under the RBI mandate, whether a similar move can be there is the talk of the market. So we need to just see that how this goes about. But this also leaves RBI with greater powers. So now with already we are seeing that NBFCs and housing finance companies has become a problem from the last October 2018, when this whole liquidity squeeze and ILFS issues and other credit issues came into picture. Now we need to see that whether RBI are able to address these issues with extra powers. Now, this credit guarantee scheme will also, kind of benefit these NBFCs to raise capital on account of sell-off of good quality loans. So this will not hamper their growth, because there will be a capital that will be available from these banks. At the same point of time, will able to repay their debt without the effort of, tapping the debt market and raising debt at a higher level. So in and all, it's a very good move that has been taken. One more important announcement which the government had done us to actually tap the foreign markets in order to raise sovereign funds. Now, what used to happen till now was that earlier government used to just either issue government bonds or T-bills in order to finance their deficits. This is the first time that government has shown an intention to tap the overseas market. So basically, this would be like maybe an issuance of a foreign currency bond or a rupee denominated bond. So it helps in two things. One was earlier, because of the higher amount of borrowing that the government used to undertake, the private players were not able to raise capital, because that used to lead to a crowding out effect. Because in account of a limited demand, most of the demand was actually absorbed by government entities by borrowing from the domestic market, and the foreign was not able to actually, private companies were not able to tap this market on account of lack of demand. But now with this demand moving out to foreign markets, it will actually open up a good amount of space for the private players to actually raise capital from domestic market. And any which ways, with this whole debt market scenario coming in place, there will always be a good demand for mutual funds for the debt instruments by all these private sector companies, which have a very good credit quality. So this was a very welcome move, and which was very evident in seen on account of reduction in the yields. So the on the 10-year GSEC yields, which were I would say were close to 6.75. Right after this announcement, the yields just shifted down to 6.65. So which was a very drastic one-day move into the 10-year yields. One of the other important announcement, which I think just took the market by surprise and actually cheered by the market, was that government maintained a fiscal deficit target of 3.3%. Markets were okay with the 3.4% fiscal deficit target announced in the interim budget. And also, markets were somewhere discounting that the fiscal deficit may hit 3.5, 3.6. But it was a very bold move by the government to stick to a lower deficit target of 3.3%. Now, how this all maths is going to add up, that we need to look at into the near future, that whether it is actually achievable or whether it would be a curb on expenditure and growth will get hampered on account in order to just meet this deficit target. On the income tax side, of course, I think most of the people were actually waiting for, like, is there anything to cheer about in the income tax? Unfortunately, on the personal income tax side, there was not a positive news for anyone. All the announcement which was done by Mr. Piyush Goyal during the interim budget stands true. So technically, there is no person who needs to pay income tax up to an income of 5 lakhs. But if more than 5 lakhs, then of course things stays as it is. However, there was one thing, I would say a new provision, which actually has hurted most of the super rich in India. So, as rightly said, in India, you have only two people. One, there is poor, and the other is the one who helps the poor. So, the government has tried to tax the person who actually helped the poor, which is the super rich. So, people have mainly, the government through this budget has mainly targeted individuals who are earning more than 2 crore rupees. So, there has been an increase in the surcharge in order so that the effective income tax rate increases by 3% for a person whose income is between 2 to 5 crores, and for more than 5 crores the effective increase is close to 7%. So of course that will create a kind of a big hole into their pockets. That's how the government is actually trying to garner extra revenue in order to meet the expenditure. However, the only negative part is that instead of increasing the tax base or bringing in more and more people into the tax ambit, it is actually trying to squeeze the revenue already from the people who are paying their tax honestly. So maybe that may not be actually a very positive move in terms of bringing in extra revenue by just taxing the already who are taxed at the highest rate. But yes, it was again a very bold move, by the government, actually throwing out a path that they are looking at equality. So basically, the rich is actually subsidizing the poor. So in that way, it can be seen as a very good social move by the government. Now, of course, there was no big announcement on the income tax side, but the only two, three things that were important is in order to decrease any harassment on account of income tax proceedings. Now, most of the assessment will be done faceless. So there will be a concept of e-assessment. So more and more people now will not need to visit any IT officers, and all the assessment and proceedings will be actually taken off online, which is a very good move. Secondly, now PAN and Aadhaar can be used interchangeably in order to file returns. So even if you don't have a PAN card, but if you have an Aadhaar, you can still file your returns. So these are very good move on the personal income tax side. Now moving on to the corporate income tax. So in the last budget, it was already announced that now a reduced income tax rate of 25% will be levied on companies with a turnover of 250 crores. That limit of 250 crores is now hiked to 400 crores. So any companies having an annual turnover of up to 400 crores are required to pay tax at a reduced rate of 25%. So after all this, last but not the least, one of another bold move or a bold proposal is to increase the amount to be garnered from disinvestment to more than a lakh crore. So earlier this number used to be to the tune of 70 to 80,000 crores, but this time the government is very much aggressive in terms of pitching for a very high number and also motive to achieve that numbers. So as rightly said into the speech, that the government is not hampered by keeping the holding into PSU to 51%, and they're also okay to go to that limit to a little lower side. Also, at the same point of time, they are very much confident of introducing more and more CPSEs. Also, there is a proposal of giving a CPSE same tax treatment like how you give it to an ALSS fund. So, ideally, still it's not clear. We need to get into the fine print, but maybe investment into CPSE ETF may be eligible for ATC deductions also. However, once we get into the fine print, that will be very much clear. So, of course, a very bold disinvestment target, a very good move in terms of recapitalization of PSUs, some amount of hiccups in terms of meeting the minimum shareholding. So all this were some points into the budget which I think the markets were not able to cheer up, and that's why the markets had a sell-off during the later part of the budget session. However, going forward, what happens into the market, what are the announcement, what's there exactly in the fine print, that all things I think will drive on the market. In which ways the markets will be off for the next 2 days, which will give enough time for all the market participants to actually understand the budget, get into the details, and finally come out with a conclusion that whether it was actually a beneficial budget or not. But in the hindsight, if you see overall, growth has been the centerpiece of this budget, be it growth through infrastructure or growth through social equality. I think the budget has tried to maintain and kept all the sections of the society happy by having something for each and everyone. So this was a very crisp analysis of the budget. And as I said, sorry, that we will come out with more details and we'll send out emailers to all our clients if there are any specific issues that may be beneficial for them. So now I will just take over some questions which we are getting out from our viewers, and I also request all our viewers to actually post down their questions. We'll try to address whatever best to our capacity. And even if we are not able to do it, we'll get into the details of the budget and we'll, kind of give you some more analysis of that. So let me look down to some of the questions which are coming up. So I think one of the question has been put up by one of the viewers is on the changes on any home loans. So yes, the budget has introduced a new section, in order to provide some reductions for loans which are taken for affordable housing. So earlier, the interest deduction which was allowed on a home loan was restricted up to 2 lakhs. However, with this new proposal, the government plans to increase this limit from 2 lakh to 3.5 lakh if the loan is taken for any affordable housing segment. So that is the change which may be very beneficial for loans which are, not the higher ticket size loan, but actually lower ticket size loan. Sorry. So that the full interest will be actually be allowed as a deduction. One of the other thing is whether investment into NPS would be a good opportunity. So yes, there has been a good amount of changes on the NPS side earlier, which was taxable, and then there were certain more changes that up to 40% withdrawal, up to 60% withdrawal, NPS will now become tax free. So in a way, it is a very good investment instrument, provides you a good mix of debt and equity, and is really a good product for long term, and also provide you a good amount of tax benefits. So yes, investment in NPS is, I think, a go ahead, and people can always look up this opportunity to also claim some extra tax reduction. So which sectors would be beneficial from this budget? So of course, infrastructure will be a key centerpiece, because I don't think so that, now in order to achieve this 5 trillion economy, it would be possible if we do not have a key thrust on infrastructure. So be it housing, specifically affordable housing, be it roadways, be it even aviation, be it, for example, if you can say metros, all this transportation. So in the budget also it was said that transportation is, of a key importance, and that's why so much importance has been given to say Bharatmala project, Sagarmala project, metros, dedicated freight corridors. So all this interconnectivity, highway projects and all would be a big beneficiary. So a sector like infrastructure and ancillary like cements will be of prime focus at least over the next few years. On the rural side, of course, because there has been a key thrust by giving out, a quarterly payout to farmers, a consumption will be a key driver going forward. So even one has to look at, the consumption as a theme. Also, with this whole 35% minimum public shareholding, there will be many MNC companies into the consumer space, which will be actually available. So one can also try to tap that opportunity which is available in the market. On the IT part, as I said, there is no fresh announcement. So as rightly been pointed out in the last budget, that if your income is up to 5 lakh rupees, in considering the rebate and everything, you will technically pay zero tax. However, the moment your income is above 5 lakhs, there is no change in the tax slabs and tax remains as it is. So there is nothing new announcement that is there in the budget to cheer the salaried person. View on the debt market. So yes, this budget is actually long-term positive for debt, which already been seen that the yields on government bonds actually became lower. So whenever the yields fall down, normally the prices go up because price and yield have an inverse relationship. So yes, now with this whole feature of attracting additional capital for debt market, opening up the debt market for FIIs, deepening the debt market, government trying to tap the foreign currency bond market, maybe some fresh investments from fresh fundraise from private investors and NBFCs. This will be actually very beneficial for the debt market going forward. And of course, the execution of all this will be a key factor to watch out for, because there has been no change in the government borrowing program. So the borrowing program stands as it is, but how the government actually implements that will be a key thing that to watch out for. As I said, there is nothing for salary class apart from the one which we already discussed. There is one question that the viewer has 100% investment into equity and mainly large cap. So does he needs to now change his asset allocation? So yes, large cap had a dream run during the last 1 year. Same like how mid cap and small cap actually had a dream run in 2017. But if you see the structure of the whole large cap, actually it is only the 6 7 stocks which are actually driving the whole market. So it's not a broader market rally, but a rally in only 6 to 7 stocks. So yes, large cap will be an important focus of the asset allocation, but at the same point of time one also needs to diversify across mid cap and small caps. Now mid cap and small cap had actually a bloodbath over the last 1 1.5 years, actually, which has made many stocks quite attractive, having a very sound business model. So I'm not telling you to invest into any stocks which are just in the news for maybe all the right or all the wrong reasons, or maybe are just available at a very cheap valuation, but which is a very sound business model, but they were just kind of knocked off because of the broader market sell off seen in the mid cap and small cap. So yes, large cap will be an important focus for the next maybe a year or two at least going forward, but a considerable or a substantial portion of your asset allocation for a long term should be into large cap, maybe either into index funds, ETFs, or some actively managed large caps. But yes, one also needs to look at to mid cap and small cap now in order to maybe provide some growth to their portfolio. Also, an interesting thing would be now to build up some amount of debt, because with so many changes actually happening on the debt market side, maybe it is a time now with RBI also giving out 2 rate cuts, and plus there are also a possibility that there may be a third rate cut in the month of August, with inflation already below RBI's expectation, with liquidity moving into surplus. I think that market also provides a very good opportunity for investment. So maybe 10 to 20% of your portfolio can be invested into debt also. So instead of exposing yourself to 100% equity, maybe an 80-20 ratio for a long-term investor having a horizon of more than 5 years would be advisable. I think one question is whether the NBFC will actually, the condition of the NBFC will actually improve or not. So I think NBFCs actually, were completely slaughtered out. It all started right from the ILFS debacle to now you are seeing even very good companies having good amount of cash on their balance sheet still defaulting on interest payments and loan payments. So yes, NBFC has been very aggressive over the last few years in order to lend to maybe real estate and infrastructure sectors, which are actually seeing some amount of, I would say, downturn in their whole sector, because of which there has been a liquidity issue. So NBFC is actually facing a twin issue. One is on the asset side because they are exposed so much to infrastructure and real estate sector, and on the liability side because most of the long-term funding, I mean, long-term assets are built over short-term funding. And now with actually short-term liquidity drying up, NBFC is facing a good amount of issue on account of this. So I do not see that this budget provides an immediate impetus which will suddenly change NBFC's sorry, financial condition overnight. But yes, at least there is a, I would say, a motive, or I would say a step towards providing some amount of liquidity by way of the credit guarantee. And we are very hopeful that with this increased powers of RBI, there will be some more regulations that may come in the near future, which may actually help the NBFCs to come out of the stress and maybe better off their whole financial conditions over the foreseeable future. I think private sector banks are already growing at, as I said, that the credit growth has been tapered, so we are not seeing a good amount of credit growth happening, be it private sector or the public sector. Of course, the public sector now will have a good amount of ammunition by of the increased recap amount, so because of which we can see that there would be something that the PSU banks will now drive the credit growth going forward. I think private sector banks, any which ways, have been very choosy in deciding on which all accounts they want to take and what amount of credit growth that they need to drive. So yes, I think for most of the private sector banks, most of the worst has been behind after the whole exercise by RBI in terms of asset quality review and all. I think most of the balance sheet is clean, apart from some private sector banks which are facing some beating recently. Most of the other private sector banks are on a growth path. The numbers actually, says a lot. Today also, many of the private sector banks actually made an intraday high. So looking at all this feature, I think for road ahead for the private sector banks, I think should be good. And if you want to actually, provide a boost to either a consumer lending or infrastructure lending, I think private sector will also play an important role into all this, which will actually help them, to increase their loan advancing and the credit growth going forward. One question was, of course, why the market has not accepted it positively. So, as I said, that two, three announcements which were actually had a very knee-jerk reaction on the market. So, be it the minimum shareholding requirement of 35% to minimum public shareholding requirement of 35%, or be it increase in the taxation for HNIs without actually increasing the tax base. No major announcement in terms of allocation towards infrastructure, or how the whole execution will happen in order to reach the 3.3. So yes, there was a lack of details, because of which the market kind of didn't react the way it should have been, because now it would be a wait and watch for on the execution plan and the roadmap about how this government is able to achieve what it has kind of announced or promised into this budget. So yes, it was a knee-jerk reaction. Also, the market was kind of building up on a positive momentum over the last 4 days. So yes, there was also some amount of profit booking that was witnessed. Uh, if you see major stocks which had a beating today, was also the one where the promoter holds more than 65%. So yes, there was some amount of sell-off that if the regulatory requirement comes in the near future, then all these promoters stake will be out in the market for selling. So many people actually took it in a very negative way and actually sold it off. Banks also had some, I mean, PSU banks had a good amount of rally, but some of the private banks had a beating today, which actually had also a drag on the overall index. So yes, but so I think once people get into the details and the fine print and the execution plan, I think the markets will then try to understand the positive side also of the budget. But if you see on the overall basis, on the macro level, the budget has pushed for growth, has pushed for development. To us, apart from not major any announcements, it was a very positive budget. So in terms of index over the next 3 years, I think it would be actually wrong to see where the index level actually goes, because that we have also seen in the last 1.5 year that actually index are touching new highs, but it's also a drag of that 5 6 stocks which are actually driving the whole index. So rather than tracking the individual index, I think the overall broader market should kind of get into that range of providing an investor a considerable 10 to 12% kind of a return going forward, looking at the 5 years CAGR. I think that would be a very positive return to earn. And of course, markets have actually surprised the investor returns on the higher side. Yes, we have some domestic issues. Yes, we have some corporate governance issues. Yes, the earnings are not picking up. But now with growth coming in, the government with a strong mandate coming in, the ability to pass many bills without any much hindrance into the parliament, the motive or the action or the vision to actually grow towards that number of achieving a higher GDP growth, I think equity markets will be the best asset class to invest for the 5 years future down the line. But even if you're looking for very short term gains on account of equity markets, maybe it's still not the right time to look into equity markets from a very short term perspective. So one of the question was that why was today's budget not so volatile for market? Actually, I think it's the other way around. It was actually very volatile for the market, because there was a good amount of sell off and rise which has happened during the day. So when the budget started off, markets were kind of into green and then just slightly moved into red. But during the end of the budget, with the market sensing that there was not major any big bang announcements either on the income tax side or on achieving the numbers and all. People were actually, there was a sell-off in the market. Also, this news about this whole public minimum public shareholding and the super rich getting taxed. I think these were all the negative things which were finally discounted by the market, and that's why it was actually quite volatile today. So whether a 3.3% is a good number on the fiscal deficit side. So if you look at the maths right now, so markets were already okay with 3.4%. Markets were also kind of ready to have a surprise number of 3.5. But actually, when you see at the 3.3 numbers, if I just break down the budget into two parts, so where this whole income is coming from and when it's going out. So government has mainly two sources of income. One is of course the tax revenue, and one is of course the capital revenues. So when it comes to tax revenues, I would say the estimation has been quite, I would say, on the moderate side. The estimation in terms of the numbers to be achieved on account of income tax collection is not so high. So I don't see that as a point where people needs to think about. Yes, but two major thing that has actually changed the whole budget maths is that government expects around 1 lakh crore on account of disinvestments. So this number was in the tune of 70 to 80,000 crores. This time it's a very aggressive number. Whether the government can achieve that number is a big question. If they achieve it, the fiscal maths looks nice. If they are not able to achieve it, then there may be some curtailment in the expenditure. If they are so strict about this 3.3%. Second is there is also a good amount of dividend that is being accounted from RBI. Now there is a committee formed under Bimal Jalan who is actually gonna come out with their proposal about how much dividend transfer should be there from RBI to government. So the outcome maybe is due over the next week. So once that comes, we will also have some clarity about whether this other aspect of the revenue. So one is of course the core revenue, but what are of course the other revenue. So whether that will actually is a beneficial thing for the government to reach that numbers or not. So of course there is one question on India becoming an education hub. So this was the first time where in the budget there was a key thrust on development of educational system to international standards. So as rightly said that first none of the institutes used to come in the top 200 names, and now we actually have three Indian institutes to come in the top 200 names all over the globe. And also there is also a vision, I would say, in order to form good amount of institutes with world class facilities, so that actually people from abroad come to India for higher studies. This will also help to kind of restrict the brain drain that India may be witnessing over the last few years. So yes, it's a vision. How they will execute it, how they will reach that thing, yes, this government is very strong when it comes to forming a vision and achieving that. So we are very hopeful that this may not be just a budget speech, but mainly an agenda which I think they will try to achieve it to the best effort possible. Does this budget has anything for equity mutual funds? The answer is strictly no. There was nothing for the common man in terms of investors into mutual funds which they need to worry about from this budget. Is it a good to have a portfolio equity heavy after budget? Yes, I think as I said that the recent corrections has actually provided you a good opportunity to invest into equity markets. So I think that today's sell-off, and maybe if there is also some sell-off going further, it should be always looked as an opportunity in order to build up long-term portfolio. So yes, short-term it would be very volatile, but if you see that there is nothing which is actually very negative going against India, then equity would be an asset class to be invested for a long term. And we also advise all our clients to stay invested into equities. Don't get bogged down by this short term volatility. Markets will never move in a symmetric way. There will always be ups and downs. But yes, over a long term, equity market is the one that will kind of create wealth for the investors. So yes, it's okay to have an equity heavy portfolio. But yes, within equity heavy, what kind of schemes you're holding, what kind of stocks you're holding, what is the asset allocation, that is of prime importance. Because normally it is said that 10% of your portfolio is actually ideas, but 90% is all the allocation. So yes, if you get the allocation right, then I think everything will work in your favor. Does this budget has anything in the crypto? I think for the crypto market, there was nothing in the budget speech. Not very sure whether there would be anything into the fine print, because till now government has not been very vocal about acknowledging cryptocurrencies and the markets for it. So we are not very sure exactly is there anything. But yes, we'll look into the fine print, and if there is anything related to equity market, we'll surely come back to you. Uh, about the ETFs, so in the budget speech, it is given that the CPSE ETF should get the same treatment as ELSS. However, whether they will be a part of ATC or a limit above ATC we still need to wait for some clarification from the finance ministry regarding what would be their proposal. But yes, the government has said that because they have set such a big number for disinvestment, the CPC will be given some good status so that there is an increased amount of retail participation also in order to achieve that number. So we are very hopeful that there will be some good news on the CPSC ETF side, but however, we just need to wait for them to get some clarity. One question is whether the rising gold and crude will actually have some impact in the market. So if you see that the gold has actually increased over the last few months was mainly on account of these issues on the global, or I would say geopolitical side. So when normally there is a theory that when there is uncertainty in the market, most of the amount actually goes to gold. Also, most of the other economies, instead of buying into treasuries of developed economies, also like to have some amount of gold reserves for their country. So that actually had an increase, I would say, upward pressure on the gold prices, and because of which you could see that gold was actually giving out a very positive return. Crude again, it's a function of markets, but I think it's at a moderate level. Of course, we'll not see the lower levels that we have seen in the past, but at the current level, also, I think we are comfortable as an economy from the crude. Yes, our import bill has increased over the past few months on account of increase of crude and gold. But if you see that there has been an increase in the custom duty for gold also. So from 10%, it has moved to 12.5%. So thus, this may curb some amount of gold imports, may have some negative impact on the gems and jewelry. How the government actually goes about with this execution, we need to just see. Should we move to the debt portfolio because the market is volatile? Yes, you can allocate some portion of your portfolio to debt, but it's not like a sell-off situation where you need to sell off your whole portfolio and move into debt side. Debt market has its own problem right now. So even if you are planning to shift to debt, either you invest into very good quality liquid funds or ultra short funds, or build up some positions on the bond side. Please do not take any credit risk by investing into funds which have an exposure to all these players where you can see some more credit defaults coming up, because one bad news and you can just see your NAV falling down by 10-20% in no time. So the idea is, if you need debt, yes, you may target some amount of long-term debt, but mainly government securities, or you move into the shorter time, or there are some other alternatives of debt products which are available into the market. You can also explore them. So I think on the real estate side, if you see that, one of the viewers asked that in spite of all the good things into the budget for real estate sector, the sector has actually fallen only. So if you see in the real estate part, it's not the demand which is actually a problem, it's mainly the supply. So all the impetus has been to incentivize buyers, which is actually to have some demand. But at the same point of time, if you see the amount of inventory which is already there into the ecosystem, there has been an excessive supply, because of which the you will see that the overall real estate sector is not able to take off. So already there have been mounting development projects which are on halt. There are already pieces of land which are developed but which are available for sale but are not getting sold. So this all just leads to piling inventory, and because of which you will see that there has been a stress in the overall real estate sector. Now, because your existing projects are not kicking off, there is also a dearth of fresh capital that can be infused in order to undertake new projects. And with this whole NBFC's liquidity crisis, which was one of the major, I would say, lender to real estate sector, the whole real estate sector is actually not able to pick up the way it should be. So yes, in terms of affordable housing segment, if you see, there are some equity players which are actually kind of doing good, but yes, the price does not reflect the full confidence which is there into the real estate sector. But yes, because with this housing for all by 2022 and other impetus given in the budget, we really feel that now real estate sector should see some kind of pickup happening over the near term. On the auto sector, I think auto sector may not be related to this current budget. We have not gone into the details, but there is a piling amount of inventory also seen on the auto sector side. So the amount of inventory which is available with the dealers have been close to, I think, 2 months. So because of which you do not see good amount of pickup happening on the auto sector. Also, the auto sector had a dream run over the last few years, where because of the whole concept of rural economy boosting, consumption picking up, auto sector was used as an ancillary play to play the consumption theme. But yes, in reality now, if you see good amount of production cuts which are being announced by most of the auto sector players, we still see that again it's an oversupply issue where the supply is more than the demand, and because of which the auto sector is facing some amount of heat from that perspective. Also, yeah, so of course there was also a good announcement on the electric vehicles. So again, this government or always had this key thrust on e-vehicles. Now already you had seen two announcements. One was that there would be zero custom duty on parts for manufacturing of electronic vehicles. Also, a rebate of 1.5 lakhs has been provided if you have taken a loan to purchase any electronic vehicle. So yes, it's a new move, but you will always see that there are players who needs to kind of survive with this whole innovation coming in. So we do not see that most of the auto sector players will just die because of the EVs coming up. It's still a long term project. It will take some time for Indians also to get accustomed to e-vehicles. So slowly it will pick up, and I think with time even the auto players will actually kind of get equipped to order to face this whole disruption which may be caused by e-vehicles. On the payment portal for which the government is building for MSMEs, I think we need to look into the details. I'm not very sure exactly its overall impact, how it would be happening. Already the government said that they want to kind of boost the electronic payments. So there would be some reduction of charges that may be happening for the people who would be using this whole payment system, so that there would be no charges and the charges would be borne by RBI and the government. But how the implementation will take place would be a key thing to watch for. So as and when we get some more details on that aspect, we will surely like to update our viewers on that part. Good news for startup. Yes, being a startup, I think it was a very welcome move on the angel tax. I think there was a great amount of debate that was happening on the angel tax, but now the government has made it very clear that once I think the investments and all the things have been shown into the returns, there would be no income tax scrutiny into the valuation and the share premium of startups. Also, the finance minister had a thrust on Stand Up India and Startup India. So there would be a specific TV channel for the startups by the startups, which will take into account the issues faced by startups and the way of helping them out. So yes, a good recognition by the finance ministry as a part of the budget for startups. What all is there in the implementation line would be a key thing to watch. But at least removing this whole ambiguity cloud on angel tax is a welcome move for startups in India. The move about replacing of Aadhaar and PAN, I think it's more of a flexibility issue that most of the people were having an Aadhaar but not having a PAN. So first the idea was to link your PAN to Aadhaar, but now in order to bring in more people under the tax net or to increase the tax net as a whole or to increase the tax base, I think the government has just made it as an interchangeable option. So now you can actually use your Aadhaar card to file return, which may just increase the overall tax base and maybe some more transparency on the taxation side. Is it the right time to invest into small and mid cap MF? Yes, definitely. I think going forward, this would be a good valuation perspective to invest into small and mid cap. But yeah, just look at your bets. We have seen already an erosion of 30% from the index level, and some of the companies already facing a beating of 60 to 70% also. So just don't go all out. Put all your eggs into one basket. Diversify. Do it through systematic way instead of just going all out and buying the small caps at the current levels. Yes, there was a good amount of benefits that have been, specifically provided into this budget. So among the financial sponsor group, there would be an OD of around 5,000 rupees that will be provided to the women. There is a whole separate section into the budget speech. So finance minister also addressed that women is an important part of the ecosystem, and there will be many more motives and incentives that will be provided for women entrepreneurs going forward. So I think it was again on account of equality that they are focusing that it's not only for the corporates but also for women entrepreneurs who wants to be or are the bread earners for the family or wants to or are upcoming entrepreneurs to provide a good amount of incentives and financial support to them. On account of the 70 crore capital infusion, I think the PSUs are already on a good run today. It going forward also, it will be used as a growth capital to actually kickstart. Any benefit for small shop owners? I think in the last budget they have already announced about a pension scheme that would be available for all the unorganized sectors, by which you can get a monthly pension of 3,000 rupees into your bank account. So already there has been a good amount of registration for this. So anyone who doesn't have any formal pension scheme, the government is ready to take on that burden, which is why I said is Gaon Garib and Kisan has been a motive for more for this government, and I think there have been various schemes that have been announced in order to address that same issue. On account of interchangeability, as I said that earlier many people were not having PAN and so they were not able to file their returns. Now with and but however the government has also tried to bring in Aadhaar in focus. There have been good amount of Aadhaar centers because of which the people are actually being able to make their Aadhaar card. And now with Aadhaar actually available, now you can just file your returns without having a PAN. So it will, I think, just increase the ease of filing your taxes. But it's not like that it's going to bring on any convenience or any changeability for people who already have a PAN card. So I think it's just I would say, an attempt to bring more people under the tax net. On the fishery sector, I think the government has already had a thrust on the whole fishery segment. They are introducing, new centers in order to impart education, to provide facilities, to provide incentives in order to promote fisheries. So, from the last two budgets, I think the government has been very positive on this segment. And going forward, also, we are very much positive that this sector also will get its due space into the whole budget allocation. With stock to buy after budget. So unfortunately, without getting into the risk profile and the investment horizon of a particular investor, we cannot directly just suggest stocks which you should buy. If you're a new first-time investor, we would much more advise you to invest through the mutual fund route rather than going to individual stocks. If you're already a investor who invests into stock, we are more than happy to review the portfolio, get into a discussion about what kind of an investor you are, and then provide you suitable opportunity, suitable recommendations. When it comes to textile sector and other industries, really need to get into the fine print. There was not much which is provided into the budget speech. So there may be some amount of changes maybe into the indirect taxes or some incentives that will be provided to the textile sector. But once we get into the fine print, we will have a better idea about the specific industry level changes which have been proposed in the budget. What would be the impact of increase in public shareholding? Yes, we would see some delistings. I'm not very sure whether the larger companies will actually like to, go to that route. Of course, in the mid cap and small cap space, there may be some amount of delistings because if you do not meet this particular requirement, it actually leads to delisting. But as I said in the start, that SEBI is the right authority to provide a detailed outlook and a roadmap about how to achieve this minimum shareholding. What would be its implication? So in the budget it was just a proposal by which government intends to increase the minimum shareholding. However, in discussion with SEBI, they will actually come out with a detailed guideline, and that's how we'll actually come to know about what would be the timeline in order to achieve that particular number, what would be the roadmap, how you need to achieve this number, whether there will be any selling from promoters, what amount of promoter selling we can see. So this all are still questions which are unknown. And I think once SEBI comes out with a detailed roadmap, after that only we will be actually able to come to a conclusion. So I see that there are no fresh questions. So we are more than happy to answer any of your questions. Even if you think that you have some questions which we are not able to ask here, you can always drop us your questions on connect@orowealth.com. We would be more than happy to get in touch with you. Take into account your portfolio, take into account your requirements, and help you in a better way once we know exactly what kind of an advice you're looking for. So whatever you have, we are more than happy to help you out. Just as a conclusion, as I said, it's a budget for growth, it's a budget for vision. Yes, markets may have not reacted the way people would have expected, but yes, that's market. No one knows what exactly the market is pricing in. But yes, for a long term, I think the government has a key thrust on development, key thrust on infrastructure, key thrust on social justice. So just believe in the government, believe in the markets, stay invested. There is no need to get nervous by short-term volatility. Wealth normally is created over a long period of time. So keep your investment horizon into mind, keep your asset allocation into mind, keep your requirements into mind, and India is always a great investment opportunity. So with all this, I really would like to thank you all our viewers for tuning in, for providing your support, and please do stay in touch with Orowealth. And we are more than happy to address any of your queries or any of your issues. Thank you so much.